All right, good morning, good afternoon, good evening to some of you. This is Will Bridges from your team at 123Trade. We are about ready to get started. Today's session, we got lots to cover. I want to show, a couple new tools. I've come out with a lot more resources here recently. I'm actually building another one right now, help everybody find a new way to pick currency pairs. But I don't know, I've been kind of using personally for a very long time, but it's been kind of difficult for me to deliver it until I decided to build something yesterday. So I'll show you guys all that stuff. We've got lots of market activity. If you guys have been paying attention, Janet Yellen, Jerome Powell, both went to Congress and spoke this week. And both of them are, fairly tight-lipped about the whole inflation conversation. And as news comes out, people see videos of, things like Janet Yellen telling Congress that she can't talk about Fed policy because it would be a conflict of interest for her is really kind of ridiculous, because that's what her job is to tell Congress what's going on with the economy here. She's the Treasury Secretary for Joe Biden's administration. So really shouldn't be, an issue that she just can't tell people what she thinks. But that seems to be what's going on right now. And, they've been playing these games for years. So I'm kind of happy that she's back because, let's just say I know that she's going to hide the truth, and I know that I have an idea of what her games might be because, she used to run the Fed. So should be a really, really fun, week. What a joke. Thank you, Tony. Yeah, definitely a lot on the plate. We got lots to cover here today, though, so I want to go ahead and get this show on the road. If you guys do have questions, don't be shy, okay? In the chat section over here, I will be paying attention. I want to make sure that I don't leave anybody in the dust. But I do want to make sure that we cover our base here. First thing first, trading carries risk. Big surprise, I know. You do have to risk it to get the biscuit, folks. There's no such thing as a guaranteed trade or a guaranteed investment. The only thing you can control is your risk, and that is why, many of you are probably here to figure out some more strategies on how to do that. But if you have questions that I don't get answered right away, there's going to be a lot of people asking a lot of questions. I'm going to try to cover as many as I can during the session. If you're watching this on YouTube in the recording, then put your questions in the comments. There are other people that have the same questions that will watch that video, a year from now. That would very much like to have those questions there. So if you're watching this for the first time on YouTube, by all means, put your questions in the comment section. We are going to go through quite a number of currency pairs here today. I also want to get into metals. And, if you guys have any other special requests, we can try to do that. We've got time. And I'm more than happy to give the people what they want. So if you have something that's, burning inside, I think somebody already asked me for the dollar Swiss this morning. That was Evan. It was definitely Evan, 100%. So I will happily go through that one. I know that the dollar is going to be very risk on right now, which means that, since we just passed this infrastructure bill here in the U.S., and we're going to have the biggest government spending budget ever in the U.S., that's really bullish for the stock market because, let's just say companies are going to have to build things for us to have more infrastructure. And they're also looking at raising the debt ceiling, which is, increasing the supply of money even further and increasing American debt even further to pay for that debt ceiling. So trading opportunities should be awesome, to say the least. Some of you might be here for your first time. And if you're not sure who exactly we are, you may have just, funded a trading account and got invited to this and you didn't even know how, which is entirely possible. But we are an introducing broker. Our main function is to make sure people have secure, regulated brokerage that they can trust. That is our whole purpose in life. That is what we want to do for everybody we work with. We want to give a lot of guidance and mentorship to help people understand, how to use their tools, what pairs they might want to look at, what's going on in the world, where is the heat, where is the money going, what's going on, how do I run this robot, all that type of fun stuff. So we're going to put out lots of videos. Okay, those are going to be, on our YouTube page. They're also going to be on our website, and I'll just pull up our website real quick, and I'm going to run through a couple of things here with you guys. as far as what's on it now. And actually, I may give you guys a little sneak peek at the tool that I'm going to release here. But homepage, if you want to open an account, that's going to take you straight to partner website, and you can fund a trading account. Otherwise, this getting started trading page is all the stuff that you should really. I wish somebody would have told me years ago when I got into trading to know all of these things, how to use Smart Trader. I didn't know about MetaTrader 4 until my third year of trading. Well, I knew about it, I just didn't trade with it. Yeah, Nicholas, I'm going to cover a dozen trading ideas today. So if you're looking for trading ideas, you're in the right place. I just want to make sure people know where the resources are for when the lights go off and you are all alone later, and you still want to learn more about this stuff. So this getting started page, I think, is very helpful. Okay, if you want to track your own results, have a MyFX book. The YouTube page is going to have all of those videos anyways. And this is going to update from the channel. So I put out a video yesterday on how to trade with robots and automations in the Forex. So by all means, check this stuff out. I put out, updates on silver. I put out updates on oil pretty much every week. I put out a Forex forecast on Monday to give people an idea of really what the sentiment is in the world. So, yeah, and David, if you have questions around Grid Trader Pro, then by all means, go check out the video that I put out yesterday. This one right here, this how to trade with robots and automations in the Forex. And that is very much, well, I made that to answer those questions for people because a lot of people have questions about how to run automations. But I'm going to be adding a lot more stuff to the page. I want to make this an absolutely incredible resource for you guys. I used to do a ton of searching every day. Actually, I still do it. Okay, I do it manually, but I built this yesterday, so I'm not going to do it manually anymore. I created an alert system that will search for the top news in every major economy. It's all going to be on one page. I've got an ebook that I'm going to be releasing here in the near future as soon as I can get a developer and some marketing people to help me out with design. Because I don't know if you guys can tell by the page here, I'm not a designer. Okay, I am a functionality type of guy. I want this to be a tool. I want you to be able to come here and get the news for the entire planet in 15 minutes. That's why I built it for myself, and I could imagine some of you probably want that same type of power. So, yeah, Tony, hit me up later, man. If you can help with the design, I don't like to wait for things. I like to build things, and I like to have things. So, by all means, send me a message. Send me a message, brother. Yeah, John, labor of love. I absolutely love building all this type of stuff. If I come up with an idea, I can't help myself. I can't wait for other people to build things for me because I don't know. I just want to have it. I want to use the tool. So we'll put it that way. But we've got tons of stuff. If you guys are trying to reload your accounts or add funds, or you have referrals or anything like that, it's the end of the quarter. So we have giveaways out the wazoo. If you guys are looking for free stuff to load up on one of the most active summers I think I've ever seen, then well, let's just say we got a lot of cool stuff that we can share with you just for funding your own trading account. Yeah, Grid Trader Pro is rocking it. I agree. And that is a big reason why I've really started, pushing that one a lot, because everybody gives us good review. I haven't had anybody complain about that one. Everybody has been telling us how many pips they've captured. It's done 11,000 pips since March. So actually, let's go ahead and start on Forex pairs. I know a lot of you guys are here for Forex, and a lot of you guys aren't going to trade the metal things. So let's go ahead and just look at the dollar. Start off with the US dollar. Okay. Oop, I spelled it wrong. I think it helps if we do that right. I won the spelling bee in 6th grade, but it's been a long time. I went to college after that. I promised I was smarter before college. That FX book demo by MTI on 27 pairs. Yeah, nice job, David. It's a solid choice if there's any pick that I would make. So we've been talking about the US dollar for a while, really for the last year, and we've had lots of interesting movement on the dollar. Let's come to the all-time frame. I want to show you guys more or less where I think this thing might be headed and what could happen, because we've got some really big developments going on right now. Things are getting hairy. The government is really talking about, well, amping up expenditure. So if our GDP goes up in the next year, then it's probably because the government's spending more money. because that's included in gross domestic product, whatever the government produces. Okay, so that's really why they're doing this, so that they can make us look productive in situations where we don't have money to spend. So we're in a deflationary period, so the government's going to try to pick up the slack. You know, if somebody can prove that wrong, I'm all ears. I'd be excited. I would be excited to not think like that. But given that's the case, I want to make money off of the situation because I don't have any other choice. Okay, so that being said, let's go ahead and get some lines on here. Okay, and this was our trend for a long time. Okay, there's a lot of other lines we can draw on here. I'm not going to draw all of them today. Okay, but that trend broke. This high price up here, very obvious. This was the high price from COVID madness. Okay, that was when a lot of people started to shelter in the dollar before we printed $2 trillion and then drove it down like crazy. Will, if you have a choice between Wave Slicer and Grid Trader Pro, which would you choose? I'm conflicted because I helped create both of those. But if I had to pick at this point, Grid Trader Pro has been getting the best results of any system that I think we've launched in a while. Not to say that other systems don't get good results. I think Wave Slicer's up too. But as far as the awesome factor goes, I like the entry strategy on the Grid Trader Pro, just because it kind of spreads you out and it closes on net pips. Very neat. I like it a lot. And if you know how to bias it, I think it can be really strong. Which is what I show in that video that I shared on YouTube. But let's come down to a lower time frame. Okay, so you guys can see we broke this trend line. This is a trend trader's dream in most circumstances. This is definitely not one of those types of times because it's really hard to figure out what the trend is right now. We're going from, let's raise interest rates to let's raise the debt ceiling, which is a very opposite, conflicting type of thing, which is probably why they asked for those at the same time. If my 123Trade email is wbridges@123trade.com. You guys should, I think the invite that I sent for this webinar last night, you guys should be getting emails from me for those. So if you're not, it's because you have me marked as spam for some reason. So you are going to want to go to your spam folder, mark it safe, and then you'll actually get all the cool stuff that we post every day. But let's zoom in here more. Okay, and as we move down on the time frames here, you guys can see we had a big jump last week. Okay, this is from the Fed coming out and saying that, hey, we're going to have to raise interest rates earlier in 2023. And then this week happened. Okay, and this week, basically, the Fed came to Congress and they didn't really have an explanation for, why we're annualizing month-over-month inflation rates at 5%. Pretty intense. So Janet Yellen is saying that she thinks it's going to be closer to 2%, but she doesn't really have a reason why, and she won't give an opinion on, she won't tell why she has an opinion, or, I know, it's all a big dance, okay? So let's come down to the lower time frame. Let's get down to the day. Because right now, what we're getting is a fresh high. This is a fractal high right here. We've got 2 candles to the left and 2 candles to the right on this daily chart. This is a high. So I'm thinking dollar weakness because this high is lower than this one. And, well, let's just say we've been faked out on the dollar many times, okay, because they want to try to pose like they've got strength, and they can get away with it because they're the American government, okay, but this is what's happened a bunch of times, okay. There's a very similar, much smaller formation right here. If we zoom up here, okay, I draw this here. This is a big fall. We broke slightly higher low or higher high. This is the same thing right here, right at the top, right at the beginning of the COVID madness. Okay, I'm going to go ahead and circle this here. There's our break, our new high. Then we created a lower high just after that and fell like a rock. So I think that can happen again, a year later. Yeah, exactly. A lot of people might call something like that a double top. I think that might be the case for what's going on right now. Let's get into a lower time frame and see if we can get some more evidence of that. Because really, I want to give myself as much evidence and reason to understand what's going on and where I should position myself, because the US dollar is going to be somewhat of a driver for most investments on Earth. And let's come down to the 2 hour. I want to see if we've got a little counter trend line break here maybe, or maybe we're working towards one. We do have a crown formation up here also. This is also another one of GAN vibrations, a little stretched out for those of you that are into that. But this is a lower low right here. Okay, you guys see this low here? There's one, and here's a lower one right over here on the right. Okay, so this is a bearish trend on the short-term time frame our time frame, we may be getting a turn right now just based on that. Okay, and we've got multiple lower highs that we have made in the last few days, the last 3-4 days. So people are not getting more optimistic about this coming up. Okay, if anything, they're getting more optimistic about inflation happening. And what that means to me is that, hey, the DJI might go up, the Dow, S&P 500 may go up, and it has been. Okay, gold, I think, is going to be a big opportunity. Let's get into some currency crosses. Let's show the thing. Evan had asked me for the dollar Swiss. We might as well start there. Okay, so if we are very risk on, okay, in the US, that's typically going to mean, you know, Swiss franc weakness, yen weakness, okay, because people will get out of those risk on currencies and move over to the risk off currencies where they can pump the stock market and, you know, do all the things that all of the news talks smack about Wall Street every day. Those highs are okay. Never mind. Sorry, that's the same question. Apologize. All right, so I'm thinking down. Okay, this came up quickly. I think it could come down just as fast. Okay, and just to give you guys an idea of what I'm looking at. Okay, let's go to the slightly higher time frame. I want to see how far this thing can go. Okay, because yes, we did get this fresh high. Let's figure out what some ranges are from the top side of this thing. I want to pull a Fibonacci range here. Maybe that one's probably not going to do it for me. I think we had a change in trend direction, but we'll try it. Yep. Let's do the weekly. I want some major ranges here. Oop. Let's try another. Get our lock tool on here. Maybe try a few of these. There we go. That's what I want. Perfect. Let's zoom in. And we've already come to our 618. We are testing our 382 right now. Came up real fast to it. There's lots of, well, there was a price pocket right here. Okay, so this is a push down right there. And the market decided to go ahead and go the other direction right from that price. I'll go ahead and get a little horizontal raise so you guys can see that. But as soon as we hit that pocket, this thing came down like a, well, like a rocket. So let's see. Let's go ahead down to the daily chart. Okay. So being that I know that we are at somewhat of a, we've already hit our 618 extension. This thing could come much lower, but I don't necessarily have to care as much about that. Okay. What I want to do is look for a 2-to-1 opportunity. Okay. Or something close to it. So I don't have to try to get out of this range and look for an extension. I know that there's lots of resistance down here below. Okay, I'll move my green line here. I'll make this my, potential place where I want to rip the tape on life and get out of this trade, because this is a consolidative zone. This is a popular price. I'm just looking for a place where the market's made previous support and resistance below where I am, so I can look for a place that I can enter, manage my risk. Okay, so here's current market price in blue, and now I just need a stop loss. Okay. As far as I'm concerned, there's no gospel in the world. That's why you trade with a stop loss every single time. I can't guarantee you that this is going to come down ever, let alone next. Okay. So, and neither can anybody in the world unless their name is Janet Yellen or, Jerome Powell. Okay. So that being said, right now, taking a look at this thing, I think we are headed for breakout territory. We just broke out here recently below our recent low. So this is a breakout trade that, I think is a perfectly reasonable risk reward ratio for right now. And this is I think a downtrend long term anyways. But being that the world is so crazy right now and things seem to change every single day, I'm just going to look for a sideways move because it's more likely for something like that to happen than a trend. At least yet. And if the trend happens, fine. I'll go look for another place to enter later. Okay, so I took a picture of this one. Now I need to figure out how much money do we put in this. Okay, and everybody's going to do something different. Okay, and not necessarily everybody's going to do something different. Everybody thinks about this differently. I want to know how much money is getting risked per trade. Okay, so the thing to measure first, how far away is my stop loss from this current price that we're trying to sell at? 50 pips. Okay, how far away is my limit? 110. So it's a 2-to-1, a little better than that. I'm into it. Okay, so 50 pips. I'll put that in here for my stop. My limit, I'm going to go put in 100. Just do a straight up 2-to-1. Why not? Now I need to know how much money. 0.1 in this box, okay? That's $50. It's a $50 risk to try to make 100. Okay, so depending on the size of your account, that may not make sense. Most successful traders are going to risk no more than 2-3% on a trade. A lot of them are going to do 1% because I want to be able to make a lot of other decisions on other days because I know that my wins are typically going to be bigger than my losses, and I don't want to have to win this trade. I would like to win this trade, but I don't want it to, oh my gosh, if this trade hits, I'm going to double my account. Every time you have one of those thoughts, it's usually going to lead to something bad happening. Okay, so the name of the game is, I'm going to show a lot more trade ideas just in this session. Okay, so there's no reason to put all of your eggs in one basket. That's why diversification is a thing, and you guys have probably all heard about that before. So I'm going to go ahead and click on sell. Okay, if I wanted to risk something like $5, okay, all I'd have to do is change that to a 0.01. That would be 5 to make 10. Okay, and then, if this thing stops me out, who cares? I lose $5. And I come back and I try to make $10 on something else later. I've got a question here about price pockets, but I've never been given a definition of what it is or how you identify a pocket. It's basically when you find these little W's, okay, and these M's that happen at the turns. Okay, so this big M right here, I'll actually draw the M. I just drew the pocket. Okay, so just to give you an idea, price pocket, okay, this is what I'm talking about. I will go ahead and get freehand draw, but this is an M, okay? Okay, so the price pocket, that price that I think is significant, okay, is going to be the tip in the middle, this right here, okay? So if it's going the other direction, it's going to look like a W, but basically it's that price, and we've already turned around at it and made lower lows, lower highs and lower lows actually since we hit it. So I'm going to use that as my stop loss. I could actually come higher with the stop, but very much a popular strategy. Let's just say I didn't come up with any of these strategies except for the one that's on the website with the news. I can guarantee you, I can't guarantee, because maybe there's some parallel universe that somebody has in my brain, and they created this SEO based news reading strategy to score Forex pairs, but I think probably not. Otherwise, when it comes to technical analysis, most of this stuff has been done before, so I didn't go out of my way to move mountains and create new strategies there. But as far as it goes, I've already opened this. If you guys want a different lot size, okay, it's the amount of money. How much is your decision worth? You need to decide, before you get in the trade, am I okay with losing this? Okay, and if you can't say yes to that, then don't trade it. End of story. Okay, so EURUSD. Let's go. Let's just move our way down. Let's bust through some dollar pairs. I think I've given you guys enough overview so far. We actually made we did a couple of things here on the EURUSD. I think we'd actually hedged ourselves. So let's pull this up here. We've got a lot going on here. Some strong winners, some weak losers. None of these are really anything scary to me. But let's go ahead and check out the euro. Okay, we've got a couple of sell positions. I may want to dump. We open those with actually the grid trader. Those are small positions. I'm just going to dump those. Goodbye. Because I don't really want to be in a sell position anymore. We just did a bunch of analysis to figure out that we're weak dollar. Okay. We also have let's see, a buy position on the EURUSD that I'm just going to let run. Okay, because we were already hedged there. We're up on that trade a heck of a lot more than we were down on the other two. So why not? Let's let it go. We can actually, if you want to, a lot of traders like to close out part of a position. You can do that as well. So if you wanted to close out half or whatever, then you can do that. But I'm going to be bullish on the EURUSD. Just given our recent analysis and the recent changes in the market, I know it's been tough to figure out, and I know people get confused, but the truth is that, you can't win all of them. So that's the whole reason why you trade with a stop loss, and you don't just marry a trade forever. Okay, so Euro GBP, I'm fairly certain that I'm still going to be short on. Dollar Swiss we just entered, but yes, so we've already managed the rest of our EURUSD positions. Let's go ahead. I've shown this one a bunch of times. I'm going to do this quickly. If you guys want to see in-depth analysis on this, I made a video. Well, the one I made on trading with automations from yesterday. Okay, literally, I did this exact same analysis. So I'm going to bust this down real quick. I'm going to add structure. And just to show you guys, really what the long term is, what I think is going on with this, okay? And what I was actually thinking about, could happen, and maybe the Fed doesn't want it to happen, who knows? But I was thinking this 110.5 price down here might actually happen, but maybe not. Okay, there's so much rhetoric happening right now, so many shadow games from the deep states of the world. And when I say deep state, I'm talking about the central bank, because that's who that is. If anybody wants to know who's actually running the world, it's the people with all the money. Prove me wrong. Let's go ahead and take a look here. This lower time frame. Okay, so last week we had a very strong downward move. I'm gonna go ahead and draw this trend line, show you guys what's going on lately. Come down to the day. I'm long pound because I know that they are trying to inflate the pound. When I say inflate, I mean they're trying to increase the value of it. They're trying to do the opposite, actually. Okay, so we haven't broken our bottom trend here. We did break an inner trend line that was very subtle. Okay, so we're very much in this little no man's land range here. We've been up for 1, 2, 3 out of the last 4 days that have closed, and if things continue the way they are today, then we're going up. Okay, so I'm going to continue to be bullish for a while unless we break through that line. Okay, you know, as the thing about analysis is you can never do too much. The hard part about it is making a decision and sticking with it. Okay, so the number one most important thing is to make sure that you let your winners run and you cut the losers. And you know, a lot of people like to, I'm going to take profit and let all these losers run. I can't get out of this one yet because I don't want to lose this trade. You know, that's in my experience hasn't worked out great. Okay, you can't go broke taking a profit, people. Okay, so so that's not necessarily the end of the world if you've done something like that once or, you know, frequently even. But it's just something you need to keep in mind. You know, if my loss is really small, I'm going to close it out early. Whatever. Who cares? Move on. Like I think we closed out at $4 worth of losses on the EURUSD. Who cares? Who cares? Let's go to, I think we're going to need a higher time frame here. Or maybe not. We'll see. Let's check this out. Let's check out our fib range. Okay, so we're right at the edge of our AB boundary right now. So, reality of this situation, I could make a real easy decision here. Okay, I'm going to use this previous low. So I got a little bit more added protection. Show our current market price. I always like to put that on the chart just so I have perspective and that I can understand how far away things are. If this trade makes sense at all, I'll be able to tell immediately when I look to see where my extension is. Okay, so my extension level is up here in the meat of this, you know, mess of stuff that happened a few years ago. That was a popular price for a while. So really no reason why we can't go touch it one more time or several more times. He who has the gold makes the rules. I agree, David. I agree. And I think, well, that situation is becoming more interesting. And we're going to talk about gold. I'm going to show you really the best news on the most bullish news on gold you could possibly read. Okay, so I'm going to show that at the end of this presentation. If you guys are looking for the most bullish news on gold you could possibly find, I'm going to show it to you. Okay, I'm going to show it to you, and it's going to be in this presentation. And we're going to do it after we get through all these dollar pairs. But I'm going to take a picture of this EURUSD. Okay, this might be, you know, short run. This might be what happens. Okay, it may still come back down to this purple circle. Okay, you know, either way you look at this, it doesn't really matter what you think as long as you manage the risk. Okay, that is the most important part. Okay, because you could easily hedge yourself and trade this both directions, because if I get stopped out on this trade, it'll have broken my trend line and confirmed what I believe to be a continued downtrend. Okay, so, you know, this thing doesn't really change long-term direction very often, but, you know, there's nothing saying that it can't. You know, usually this is about the distance it goes, you know, every year type of thing. I mean, it's a very, well, the trend has only changed maybe a dozen times the last dozen years on the EURUSD. But that said, this is an equally valid trade to shorting it and going the opposite direction down to here. This is just really what I think is going to happen based on current market situations and what the market is showing us based on, well, the sign languages that it gives us. Okay, so I'm already in this trade. I'm not going to open another one. Let's go ahead and get over to the pound USD. Yeah, it could be a range trade. Totally up to you. We can check out that EURJPY in a bit here. It's going to be, the EURJPY in general is going to be whippy-lashy like crazy, in the words of Jared Martinez. But let's go ahead and zoom in on this thing. This is the pound USD. Okay, somewhat of, well, what you would expect to be a similar trend. because the pound USD and the euro USD correlate pretty heavily. Okay, but here's our trend line break. Okay, the thing that makes me bullish on the GBPUSD is just that the Fed is very, very interested. Not the Fed, the Bank of England is very interested in buying their own stuff. They buy their own bonds more than anybody else I think I've seen in the world, and they've been ramping it up like crazy. How long do you stay in trades for? Well, Nicholas, is usually, I think my average is somewhere around 3 to 7 days. Sometimes it might be 2 months. I stay in until either I get a signal from the market that I shouldn't be, or, you know, I hit my profit target. One or the other. And obviously, you know, the shorter term your trade is, then, you know, the less signals that you're going to get in between. So if you're looking for scalps, a lot of people will run automations so that they don't have to think about that. Because these big, like 300, 400 pip moves that I show in here sometimes, most people don't have the patience to wait for that stuff. So a lot of people will run a trading automation so that they can try to take profit along the way. That way you can have, you know, the system close out profits for you every day, as opposed to, okay, if it makes it all the way to my target, then I'll get paid. You know, that is the difference. And that's why robots are pretty cool. But let's go ahead and get down to our weekly. And here we are looking at something similar to what we had on our EURUSD. This line isn't important anymore on this lower time frame because we've already kind of decided this has been a short-term uptrend. Okay, so interesting part about this, we are at a recent high. This is a somewhat of a defined range in here. If you guys can see that. Okay, this is my second favorite tool in all of trading is the box. Okay, so I think we may be ranging, okay, because right now I think that the world is in a race to the bottom. Okay, and I think it's going to be very difficult for anyone to win. No, because Europe is talking about lowering interest rates. The US is talking about raising their debt ceiling and increasing spending at the same time. You know, all of these things are a race to the bottom. Okay, so if they're all racing to the bottom, I think it's going to be like a horse race, and you know, we're not going to see a clear winner for a while. We may see some sideways stuff, which might be what's happening with, you know, the Euro USD as well. All of these might be slightly different. David, that's funny. But either way, okay, what I've just done for myself is I've just figured out a range for myself that I can work in. Okay, so I'm going to pull this whole range here, our recent wave, because this might be our wave. This might be the top. This might be a little double top. Okay, so I'm going to try to take this back to my 382 within this range of my pound USD, because I don't have to go any further than that to try to get paid here. Okay, so if we're at our 114 level, that's right about where my blue line is. Okay, and I look for a stop loss somewhere around here close. Okay, right outside my box maybe. That looks like a pretty decent opportunity to me, and I found it on the weekly time frame. Okay, so this could be something that takes 3 weeks. Okay, this could be something you run a trading automation on, and maybe you're hedging yourself on this one versus the Euro USD. Okay, but that's okay because I don't have to win both to be profitable. I only have to win one. So if I'm trading against myself in one of them, who cares? Because one of them will ideally win, maybe one of them will lose, maybe both of them win. You know, that is an option. So, that said, you know, I think this is really what I'm looking for, to show this on a lower time frame. Okay, just to give you guys an idea. Okay, that's, you know, not super far. We're talking about $1.32 or at $1.3934 right now. So that may be an aggressive downward move. Maybe this thing loses instantly and we win our Euro trade. That's pretty much how that would go. If this thing blasts through the ceiling most of the time, just based on the correlation rates, all that type of stuff. But like I said, this is a different trading style and a different trading methodology than what I showed you on the Euro. So you guys need to understand that some traders are going to be looking up and some traders are going to be looking down in every situation. Okay, just because there's a lot of strategies. And if we look at this here, we're almost at the end of the month. Okay, this says bullish engulfing, but if this candle closes any lower today, then, you know, very much could be in a situation, you know, that this thing is coming down. But all of that being noted, okay, I want to show you guys something else here, because that may not be the trade that I take. Okay, may not be the trade that I take. This thing is making curves. Okay, so it's not necessarily something that you have to go a specific way. If those of you contrarian people out there, let's go ahead and I'm going to show you guys something real quick. Let's go to the sentiment page on Daily FX. Okay, what most traders, 55% of traders are net long on the pound USD. 45% of them are short. Okay, so somewhere around half of people are going to be wrong. And if I know that the GBP is likely to be bullish, okay, then the USD is likely to be bearish, I can go ahead and trade this thing up. Okay, I wanted to make sure that you guys understood that there are multiple different trading strategies, and how long you stay in, a lot of that is based on, okay, I don't care if it digs against me 80 pips because I'm trying to get 400 on the top side. So longer term thinkers may be trading a completely different direction in some circumstances. And I want to help you guys understand that situation, because people will say, well, Chris is long and Tyson is short. It's like, well, for how long and where are their stop losses? This has been an uptrend for a long time. This is a strong down move that we've got. This could very easily be a fake out. So I'm going to show you guys another way that that you could potentially trade this if you're more bullish on this. And a lot of you are. Let's come down to maybe our day. Maybe we get a little bit more relevant range here. And we did. And it does look like we got a bullish signal here. This is a piercing line as soon as we got into our other range to come back and try and test. So this thing may actually come up. Okay, so this may actually come up. So, I mean, exactly, David. You need to know where everybody's targets are. But really the most important thing is you don't necessarily have to know where everybody else is. You just have to know, where your risk is. Okay, how much money am I risking, and is it worth my potential reward? Okay, because this is the same trade. Okay, this is the same currency cross. This is actually a much better risk reward ratio than I just showed you guys on that other chart. And this fits in with my other idea. Maybe I don't hedge myself, because some traders, are going to feel safe for hedging themselves and going the other direction on this trade, like I showed you guys first. So, as much fun as it would be to just say that, I'm going to be right every single time, I'm not. And neither will you, and neither will anybody you ever watch. And if you watch somebody that wins every single time, it's because they don't show you the losses. And that's really all that there is to it. Okay, so let's take a picture of this thing. Yeah, I don't think we're in this one. I'm actually going to take this buy opportunity because from a risk reward standpoint, this is a 300 pip risk roughly for, a 600 pip opportunity. Let's measure this and make sure we're a little bit more exact about this. Okay, so I guess 260 pips to try to capture 679. 670. We'll say 650. Let's just go light on it. Let's be even lighter on it. 650. Okay, that's a pretty amazing risk reward ratio. Something a lot of people might bump down to their 1 hour time frame, turn on a trading robot, let that thing rip. Maybe you might let it trade in both directions. Up to you. Maybe you set it to buys only. Hey, maybe you're on that other side of the fence and you think it's coming down. It's been an uptrend. The reality is it's either going to be sideways, in my opinion. I don't think this is a downtrend anymore, just because of the dedication of the bank. And when I say the dedication of the bank, okay, and this is going to be important because I think somebody asked me for more pound pairs later. Okay, this is the calendar. Okay, the asset purchase facility. This is not the votes. I want the, here it is, this. Okay, I'm going to show you guys this graph. Okay, I don't know if you guys can see how high that is, but this is basically Bank of England purchasing of their own treasury bonds. They have gotten very aggressive. This is the equivalent of, a company buying their own stock, because that's what this is. Okay, if they want to bring up bond yields, they have to buy their own bonds, and they are buying them more and more aggressively than they ever have before. So they are dedicated to the game. All these banks are dedicated to the game right now. Okay, so I don't see them lowering this number and tapering off anytime soon. Okay, so I'm going to stick with long on this pound. And primarily because of that. And they're showing a little bit more resolve. They're not getting as much global heat as the US is right now, I think, in reference to inflation. So, and I think that's just by nature of the fact that the US has the world's largest economy. Okay, so let's go ahead and figure this thing out. This is a much bigger position, a much bigger risk than the 50 pip risk I showed you earlier. If I wanted to risk the same amount of money as I did on that last one, I think I did a 0.1 or something. then I would basically just have to come down to a smaller position. A 0.02 would be the exact same risk. Okay, maybe not exact same. I mean, obviously things can happen, but it'd be virtually the same. You know, I'd be risking, you know, $5. Not a big thing for most people. Actually, no, excuse me, not $5. This would be, I did 50 on the other one. This would be, hold on one second. I got a little turned around here, folks. Let me look at the actual trade that I opened so I can give you guys the actual truth here. Yeah, so we opened a 0.1, okay, on 50 pips. Okay, so that is a $50 risk. If I wanted a $50 risk on 250 pips, okay, then basically, yes, I was right. 0.02, I don't know why I second guessed myself there. Let's go ahead and click buy. Okay. Sorry about that. But let's keep on rolling here, okay? I know that we've been through a couple of different things here. I want to make sure that we cover our base. Did we get on the USDCHF? Did we do that first? Is that where I got that 50 pip trade that I was talking about? Yeah, we did. Okay, perfect. So let's get over to the land down under. Check out this Aussie USD. This thing has been bullish for a long time. Okay, it's a very similar type of situation that we've got here. Okay, this thing came down with a vengeance. Okay, from 2011, this is economic recovery to economic collapse down here. Okay, this was like basically, this is where we were kind of thinking we were out of that 2008 crash. Thanks, David. I've never had Vegemite. It sounds neat. But this is the crash that happened later. Okay, so this is recovery to crash that I just circled here. And you know what we might want to do? Because I don't know where the recovery is going to happen, but I might want to trade up for a while. We're at this 382. We already busted it. Maybe this 50 is our next level up here. This might be a good target for long-term positions all the way up at 82. Okay, 500-600 away. There's lots of reasons to believe that might be a good price, and I'll go ahead and show you guys. Well, I mean, there's, as we mentioned earlier in this presentation, some price pockets. Okay, at virtually this level here, I think right around 82 cents. Okay, so maybe the market cares about that a lot. Seems like it has a few times. We closed at this price on this big wick here years ago. Let's go ahead and circle a few of these. Okay, so we've got these big wicks here. We've got big wicks here at those close prices. Okay, close prices are here. No reason why we can't get up there. I mean, as soon as maybe when the world stops recovering, you know, like it did back here in 2011, and we get back into this normalcy area of time where people are comfortable, you know, no more change. That was that 2011 people were like, oh my gosh, Barack Obama is the best person on earth. And maybe he is. But I'm just saying that's really what the feeling in 2011 was. Not fear. It was more things are getting better. You know, that was really what was going on here in the US. I don't know about you guys, but that's pretty much what was going on at that time. So if we're bullish on the rest of these dollar pairs, I'm going to make this simple. And I'm just going to come down here to my lower time frame. Okay. And I'm going to look for a potential place where we could enter this thing. Okay. This does look like a pretty ugly crown on our Aussie USD. So, and we are getting lower lows, lower highs, but I mean, end of the day, the news of the infrastructure bill is a very fundamental change. Okay. This is this bullish piercing line here. We broke below, but the market came up fast. It did the same thing over here. It's really hard to say what exactly is going to happen because there's no way to know for sure. And you know, I don't like to go against my strategy. I like to go with the patterns of the market. So this is where the trend lines have been over the course of the last year and a half. You want to draw the box? I don't know, David. We'll try that here in a second. We'll do that too. But basically, this thing has broken trend a bunch of times, and it hasn't really come back down. So it tells me that they're probably trying to get it to come down. They're just not doing a good job. So this price, you know, also from a GAN vibration standpoint, if we break the highs if we break these pockets that are right above where we are now, this thing could be going for a long ways. Let's see if we broke trend on Fibonacci ranges. And we're at our 236. So really, if we want to be more conservative, and maybe we think that the dollar could come against us on some of our other trade opportunities we've got picked out, okay, This is telling my extension level could actually be higher, all the way up here at 83.3, which would be cool. I think 82 is a pretty good target. But, you know, if we wanted to be a little bit more conservative on this, you know, I don't think this thing is retraced further down than the 382 all year. That might be where we decide to enter, or it might just be where we decide to reload. Okay, because I could get into this twice in anticipation of the U.S. destroying the dollar more later this year, because it seems like that's what they've been wanting to do. At least based on the amount of money they print, everything I know about economics, you know, it seems like they're trying to drive it down, which is not necessarily destroying it. It's increasing with its prevalence. So everything's a gas brake. And, you know, I don't know what their 10-year, 20-year, 30-year plans are. At least for sure, I know that their 30-year plan is to get rid of oil. So a lot of things could go into them doing that. But this may be my opportunity. What I just showed you guys here, I'll go ahead and take a picture of this. I love the comments, by the way, folks. Okay, so you guys wanted a box. Let's actually move on. Let's keep moving here, folks. The stop loss line would be the red one. Blue lines I usually use to alert myself where I might enter, or the current market price. Okay, so I may look to enter at both of those. I think 74 would be a great price if it gets there. It is kind of a range. I mean, it depends on what time frame that you look on, because there's always going to be, well, let's just say there's ranges on every time frame. There's a box. I think somebody had asked me to draw a box. It was I think David. Let me get down here and let's clear all this stuff out. I already took a picture anyway. But the reality, a lot of people might have been looking at a box like this. Okay, we've broken out of it a little bit on the top side. Okay, so we could be very much just working our way back towards the top of this box. This is a completely different strategy, but I'm working, you know, pattern just like anybody else would be. So maybe you try to just trade to the top of the box. Okay, if you are going to use this type of strategy for something like this. Okay, so I'll get my blue line on here, current market price. Then you guys can really understand what I would be using my box for. And really the whole purpose of the box is just to figure out what the pattern is. Okay, if the pattern is to get a little bit out of the box and then go back to the other side, then cool. It's whatever works for your eyes and finding an equitable position. Okay, that's really what it is. You could very easily convince yourself to sell this thing right now. You know, I mean, there's no way to know who's going to be right until this thing plays out. You know, like people like to try to flex on me all the time. Say, well, that's going to do this. I'm like, well, how do you know? Like, who's your person? You know, who's your contact? Because this trade right here looks very pretty too. That could be great. Why not? Why not? This comes back down to that 74 price. Okay, so we could hedge. We could do both of these trades. Both of them could win. That's the fun part, is that both of them could be winners. But it really comes down to risk reward and how much space, okay, you have between your risk and your reward. Okay, so I need to monitor where my risk reward is best. I don't have to be right. Okay, I spent years trying to be right every single time. It doesn't matter. Okay, I think overall, I think I probably win somewhere between maybe 5 to 7 out of 10 overall. I think my win rate's a little higher in the stock market because I think, well, it's easier to find volume there. But I mean, either way, that doesn't happen as fast because the Forex is going to move every day. This looks like exactly the same trade on the NZD USD. So if you guys want to know what I think about this one, I would suggest, you know, if you're watching this recording later, then by all means, just watch what I just did on the Aussie USD. This is almost exactly the same. The thing about the NZD, and I'll pull up my tool here too, just to show you guys. The news page that I just made here. Where did I put that? Oh, here it is. Okay, if I want to know what's going on in New Zealand, okay, New Zealand dollar recovery aggravates pound New Zealand's headache. New Zealand risks disorderly correction on property. Okay, New Zealand's World Trade Commission triumph shows nice guys finish first. New Zealand leads the epic housing bubble rankings, which means that, you know, their housing is getting very expensive. Okay, like there's a ton of news on here. Okay, there's 10 articles from every major economy, and this is all stuff that I used to search for every single day. I'm gonna, as soon as I get this page launched and it's usable, and I get that ebook ready to go, so you guys can start rocking it out. I want you guys to be able to understand that buying a currency is very similar to buying a stock. You guys Google the stock ticker before you buy it, or the cryptocurrency, or whatever the heck it is, right? Okay, so absolutely not a big surprise to Google something to get more information about it, but that's really where I go to do it, and you'd be crazy not to, because they aggregate all of the search data and traffic for the entire planet. So that's what that's about. Let's get into something other than the USD. Okay, let's look at, we're getting closer towards the end here. Somebody asked me for the EURJPY. This one should be a dogfight race to the bottom. This one actually looks really like a great, easy decision I don't even have to think about for very long. But let's go to the, not everybody's going to look at this naked chart and feel that way immediately, so I want to help you guys, and maybe I shouldn't feel that way, coming back down to the lower time frame. So let's go ahead. Man, I'm glad I came to the high time frame. Those of you that don't ever look at this monthly chart, shame on you. Shame. Okay, you need to come to this monthly chart, because we come back down to this daily. Okay, that looks like a real sexy sell right now. I don't think so anymore. Because that we would be really calling the top of this trend. Okay, so we'd really be saying that this trend is over, people. And we haven't really broken it and confirmed that yet. So that doesn't really make sense. When we're above the trend, hey, this thing might have just been coming back for this backside test, and we're off to the races to the north. Okay, so let's go back to the month and work our way down. Okay, so this is a very clear trend line break. This thing came down crazy fast. Okay, one of my favorite tools, okay, that never really gets used by a whole lot of people anymore, because there's probably 3 versions of it out since then, is this Target 2.0 system. I'm going to just search Target, and I'm only going to use the monthly targets. Okay, the missed targets indicate a very strong trend in one direction. Okay, and targets get hit. Okay, if you guys can see all these little purple lines here, okay, most of the time they get hit. We've got a very seldom missed target. Okay, we've got one right here. Okay, so we've already hit this month's target. Okay, we've got one other missed target down here below. Okay, and I showed the trend on the EURUSD, or excuse me, on oil the other day, and oil hasn't trended this heavily in 7 years. Okay, so if you guys want to check that out, I made that video this week too. Hasn't trended this heavily in 7 years, and a lot of it's because back over here in this area, oil's got this same missed target that we have right up here. Okay, and I haven't looked at this one in a few days, but this is very familiar to me. Well, the yen's going to be very heavily tied to oil also. Okay, so targets get hit. Sometimes they get missed. Sometimes it takes years for things to come back. This is 7 years later. That's how long it took for oil's missed target to get hit last time. So, David, I'm not sure if this target's available in marketplace or not. There's like I said, there's the original target trading that came out, I want to say 7 years ago, something like that. And then we came out with target trading 2.0. And then there was a target trading 3.0, and then a target trader max. If you guys are interested in this one, just send me a message, and we'll see if we can figure out how to get it for you. Actually, if you're in this session right now, just type in the word target indicator, target indicator, and you loyal customers, clients that show up here, people that take my time and make it valuable, I'll happily share with you people. By all means. We'll make everybody jealous that doesn't come to this session, that watches the recording. If you guys want the target indicator, type target indicator into the chat box, and we'll talk about that later. This is target trading 2.0. This is old school, people. Okay, so there's nothing wrong with old school. I think the line's pretty old school too. So is the box. I finally did it. I asked you to type in the chat box. Wow, it seems like a lot of people are interested in that. Very, very cool. Okay, and I can understand why. It's one of my favorites. Okay, old school is the best. I agree. But yeah, so it is a counter trend tool. So what it's measuring is, the market came this high. Where does the market have to come back to do its little stair stepper? Okay. And if it misses that step, how long is it going to take for it to come back? Okay. So there's only really 4 missed targets the last 15 years that I've shown you guys. Okay. Which is really cool. In my opinion, at least, they get hit, maybe not right away, but they do eventually. I'm going to draw both of these targets. Okay. Price levels where they are. Okay. I've actually got the lock tool on. I want that off. Okay. So we missed it. We still haven't come back and touched this EURJPY. So I think maybe that's the price. I think maybe that's the price where this thing is headed, all the way up to 151.59. And they've been trying to devalue the yen for the last, 30 years. So, maybe they finally do a good job this time. And let's go ahead and pull a Fibonacci. Let's just see what's going on here. Oh, we're right in the meat of that. Okay, this is on the monthly time frame. Maybe let's check out the weekly and see if there's another one. Zoom out here a little bit. Oh, wow. It looks like those 2 levels are very important Fibonacci levels. And, reality situation, we broke out of this uptrend. This thing went sideways. So that one's really not, really what I would want to use. I think maybe the monthly is probably a little bit more useful, but we did come down to our 618 almost perfectly on this range. Okay, so our 1618 extension is where we would expect to be, where we might, really get bearish on this thing and start to try to go the other direction. Probably be up there at that green line. I'm going to dump these other target trading levels here. Okay, so now at this point, hold on one second. I make the joke because, oh yeah, okay, I understand, David. It is there. Hey, listen, I'm part of that. I'm part of the team that comes out with new trading ideas every week. Okay, so that's why I know about all these strategies that they have at Smart Trader and at Market Traders. Some of those, were a couple of those have been, indicators that I picked out. Chris's brain does think like a target indicator. I love Chris Pulver's approach. Okay, a lot of the tools that come out are Chris's, and I think he's probably the smartest guy that I've ever come into contact with when it comes to trading stuff. Because he's really the guy that turned me on to, like, I used to ask Chris questions like, hey, do you think is it okay is it safe to buy this or sell it? He's like, do you have a stop loss? This is his only question. Then yeah, sure, you're fine. So, because nobody knows for certain up or down. You can just do what happens most of the time and hope things work out well. Right now, I'm looking at bull. We've got missed targets up top that we took years to hit, or years to come back for. It might take us, it's been, oh heck, these are the only 2 on the chart that haven't been hit, and this happened back in 2008. Oh man, what a year to try to climb back towards. Okay, it seems like we're climbing back towards 2008 right now. We have been for the last year. So, well, why fight fate? Let's get paid, try to at least, and manage our risk. Okay, that's really what this is about. I just want to manage my risk. It doesn't matter really if I'm right or wrong or what I think or any of this stuff. I just need to have targets that make sense and prices that I can protect myself with. Okay, so this point, I'm going to come down. We're on our daily. And it looks like we did the same thing. We bounced off of our AB boundary here. We may rip the tape on life in the short run somewhere up here, okay, at our red extension level. Okay, let's go ahead and get a blue price on here for our current market price. And let's go ahead and get a potential stop loss. And, maybe we just use this heavy turnaround here below. We have enough risk reward ratio on that. I think that may be a winner for me as far as my strategy goes, because, I really just want to make sure that I don't risk way more than I should on any given trade ever. Okay, and the reality of this situation, I could be a little bit more aggressive on the stop loss if I wanted to, but our odds of getting stopped out are much slimmer where I am right now than they are if I say do something like this and I rely on these higher lows that have already happened. Some people are going to be real cavalier on stuff like this. Okay, I'm going to go ahead and just take a picture of where I have this at the safest price. Well, the safest one from getting stopped out quickly, at least. No prices are safe. Okay, there are no walls in Forex. No walls in Forex. There are only screens, and lots of things get through screens, to say the least. So that being said, a lot of people may look at this, they may come up and they may look for a consolidative type of trade. They may look for something like that. Okay, so if this thing forms a double top and comes back down, I could still profit on this potential short-term move. Okay, and this is 160 pips that I just showed you guys here. Okay, so lots of different approaches. Okay, you obviously don't want to take massive risk anywhere if you don't have to. And if this thing does come down against me in this situation, even on this little scalp here, some people may even load into this thing again. And I'm showing you guys all this stuff because there's a lot of strategies. Okay, and mine doesn't win every time. None of the strategies I've shown you win every time. Okay, the number one strategy that I adhere to, and the one that's part of every strategy that I use, is I want to make all of my decisions worth the same amount of money. I want to know how much money I'm risking on every trade, and I want to be comfortable with the amount before I open it. Okay, and other than that, okay, it's really just, does it make sense? Okay, is my reward going to be, is my potential reward bigger than my potential risk? It's really what that comes down to. All right, Aussie Dave. There are a few Daves here, though. I got a few friends named Dave in this group, I think. Dave seems to be a dedicated name for trading people. At least it is at 123Trade. But there are a lot of yeah, so weird. Sorry, Daves. Anyways, we're making it awkward for everybody else. Let's move on here. Okay, so let's go ahead, and I'm joking around. Just so we're clear. It's Friday. It's hard to mess up Friday, people. Let's check out gold. Okay, this may not be the last thing I show here. I know you guys will probably ask me for something else, and I'll probably cave and show it to you anyway. But let's go to XAUUSD. And gold, I'm starting to think could be very bullish. Okay, we saw 1775 here last night, and we're back up to 1787. This green area below, this was our buy zone that we showed, I think, from last week. And I think gold's got legs right now. Okay, and here's the reason why. Okay, I'm just going to show you guys a couple places where people buy gold. Okay, this is actual physical gold. The actual physical thing. If we go ahead and we click on gold, okay, just see what's available. Okay, let's go ahead and check out, gold bars. Let's shop 177 products. They have 177 different kinds of gold that they usually sell. Let's see what they've got available. And now let's scroll down here. Okay, we've got 1, 2, 3, 4, 5, 6, 7, 8, a dozen different kinds of gold available. Let's see how many are not available. Wow, they stocked up since I looked at this last night. Let's go ahead and see quantity. Let's see what we can get for quantity. I wonder what the limit is. They changed their outlay here. I can't find out what my limit is, and I guess until you get to the card anymore, they don't want you to know the supply is crazy low. But yesterday when I looked at this, just to show you guys, well, maybe we'll go to coins. Coins might be a little bit more easy to tell. Okay, let's go to American gold coins. Let's just check them out. Shop 137 products. Okay, so if we pre-sale. Okay, out of stock. This is what I'm talking about. Out of stock. You guys get the point. Okay. Out of stock. This is worse than toilet paper was last year, people. Okay, so if you guys see this, okay, this is American gold coins on this website. Okay, out of stock. You guys get the point. Okay, if we go to another website, let's go to gold silver. Okay, let's go to gold silver. See what they got. See if we can find some gold to buy here. Let's check out coins. Let's see if they got coins. Bars are gonna be in stock a little bit longer because they're more expensive. Coins are gonna go faster because more people can afford them, especially in gold. Okay, as far as if we look at silver, then it's probably going to be a little bit more scarce in the bar department just because they're less expensive. Okay, so we scroll down here. They don't even have as many choices as they usually do. This is it. And you can only buy a maximum of 20 of these coins. 20 of these coins. Okay, you get 1,000 of these InstaVault gold, 100th of a troy ounce. Okay, you can buy a bunch of those, but you can only buy 20 of these coins. Okay, so that's very, very tight supply. There was a time that you could go buy hundreds of gold coins if you wanted to, from pretty much anywhere. And everybody's talking about a lot of different things. Okay, silver, I could show you guys the same thing. You met the guy at Gold Silver in the US at a conference in 2011. That's really cool. I like him. Mike Maloney. Seems like a smart guy. That Hidden Secrets of Money series that he put out is really awesome. I think it was probably more helpful than my economics degree. Maybe not. I don't know. One hand washes the other, but I think that guy's sharp. He's a little bit more bearish than I think a lot of people are because he's trying to sell gold to people. But that is what it is. So let's go ahead and talk about this. Okay, where might gold go? And really, I think near term, I mean, the sky's the limit. I can't put it another way. Sky's the limit. So much is going on right now. I don't know if anybody even realizes they're still trying to audit the election from last year in multiple states and ramping up audits. The Secretary of State in Georgia here in the United States just got a criminal attorney to represent him to fight in the in the fraud case that they've got going there, because there's video of people scanning electoral ballots 3 times in a row after they told everybody to go home without witnesses, and that's still going on. So regardless of whether you believe that actually happened or not, there are still a very large percentage of people in the US that don't believe Joe Biden won. And if they come out with this audit information, Arizona's just finished counting and doing all their forensic audit this week. They're going to come out with their report this month. And the people that they're fighting are getting criminal attorney representation. Okay, so that is ugly. Okay, so I don't care what anybody thinks. Yes, and they took away Rudy Giuliani's ability to be a lawyer in New York, which I think is ironic because, well, why didn't they do that to Hillary Clinton's lawyer? So it's really getting interesting here. Everything is super political. I'm not trying to take a side on anything but the market. Okay, I'm just telling you guys what's going on right now, because if that comes out and 50% or more of Americans start to think that Joe Biden cheated and people start to go to jail, gold is going to go up. Okay, there's no guarantee about that, but if we have an issue where we have an uprising of really the other side of the government's talking about how dangerous the right is now, and they want to take guns away and all this other stuff. Things are about to get hairy here. Okay, so I don't care what your belief is on this right now, which side you're on. You shouldn't care about my opinion either, because it doesn't matter. But either way, if that situation comes to fruition, it will be a very big impact on the value of gold, silver. The stock market's going to have a not very good time if we're not sure who's going to run the world 6 months into, 6 months after an election. If you need a place to stay, come to Canada. I'm in Florida, Evan. If anybody needs refuge, Ron DeSantis has our back here in Florida. Come visit. The beach is beautiful. It's the summer. I've got a heater on the pool when winter comes, and we've got a hot tub here, and a full sun TV to watch out there in the back patio. I'm thinking about doing a webinar back there next week. But let's get down here. Let's go ahead and see where this thing's headed. Near term, even I think $2,000 getting back there is extremely, extremely possible. Okay, so if we come down to the year, okay, gold is something that moves. We hit our yearly target here already. You guys see this is our target trading tool? Okay, we have 0 missed targets. 0. Okay, 0. So there's nothing to look back for with gold. Nothing. Okay, actually, maybe that's not true. I think I may have just fibbed. There may be actually one here. Just one. Let's go ahead and circle it and see where price this is at. I think that's actually kind of funny. I didn't even know that existed. $492. How many of you guys think we're coming back for $500 gold? David, I'd challenge you on your Australian beaches every day. there are 30 beaches I can go to within an hour and 20 of my house. The most beautiful beach in Florida is actually on government property. It's a federal beach, the Playa Linda Beach, and you can actually sneak into it for free. Don't tell anybody I told you that. If you go down Biolab by the boat launch. And actually that skips the whole line lately because with COVID they've been closing the, well, let's just say it takes forever to get into the beach now. But this looks pretty bullish, right? You guys look at this, you know, this is pretty bullish to you guys, right? Regardless, this is gold. This is all these, this goes back to 1990. This is 30 years. Okay, so if you bought gold anytime in the last 30 years, except for the last 6 months, you're probably up. Okay? You need to find a job in Florida, move your family. Yeah, there's jobs here. We can't find workers. Depends on what you want to do. That's what the problem is here. It's not a matter of there not being jobs here. It's a matter of workers. But risk reward, let's check this out. Okay, so I think, okay, our heaviest range here that I'm going to use is going to be from the beginning of the COVID madness down here in March. Okay, because I like to use the big signals from the universe that something's happening, and you know where the panic ends and where it goes the other way. That's where I like to put my fib ranges. Okay, I want to know where the big vibrations are, you know, when the problem started and where it ended. Okay, and that's pretty much what this is. This is where, you know, COVID started, you know, the high on gold ended there. We just hit our 5.0 and we've been coming up. We hit our 618 down here. So maybe, you know, like my retirement account, all that stuff, I'm invested in personally. Not here to trade other people's money, but my own money. I strongly believe that this is a uptrend, say the least. It has been for the last 2,000 years, so that's really far away. And if this thing comes down, now I'm the type of person that's gonna load up even more. I don't think it can get out of this range. I don't think we're ever gonna see the prices we saw before COVID ever again. I think that's an absolutely disgusting opportunity. If you can take advantage of it, you may not even want to try to take it this far. You may want to quit early down here at this 21.9, or you could even quit at the top of our range at the 2,000 area, which is actually what I'll take a picture of because, well, you guys know I'm thinking that this thing can come up as high as I just showed you, but I don't think it's necessarily going to do that. Well, before it gets to 2,000, it's going to go to 2,000. When it comes to a trading perspective, some of you may want to be more aggressive than this and trade a smaller range than this because, you know, a $100 move on gold at $20, you know, $2,000 risk on gold may not be for you. Okay, so depending on what it is that you're, what lot size you're trading. But let's come down to a lower time frame. This is the day, okay, and some of you may want to crunch down and just trade the consolidation zone. That would be here. Okay, this is the consolidation zone, and I don't necessarily have to be, you know, super, you know, far away on this one. This is probably a little bit more in the range of what a lot of people would be more comfortable with. I'll take a picture of this one too. This is really just looking for about a 1925 price. So not looking for a new high, just looking for a place where the market's made turns many times before, and we're at a price that we've turned at before. So I like it. Let's rock. Okay, I think I just got in this one last night when I made a video. So fears of illegal gold again, definitely. There's definitely going to be illegal gold. There's going to be people are going to try to sell fake gold coins more than they ever have in the next couple of years. For all the reasons that I just showed you on, well, let's just come back here, okay? Let's come back here. There's going to be fake silver, probably more so than fake gold. I think it's probably harder. It's probably easier to, nationalization. Maybe, but I don't see that. I don't know. I don't see people actually turning it into the government any more than I see people turning in all of their guns here in the U.S. Just because that's really, I don't know. Joe Biden made a comment the other day that, you know, what do you need guns for anyways? If you wanted to protect yourself from the government, you're going to need a nuclear bomb, which sounds like a threat to a lot of people. But you know, it's just not things are getting ugly here. And I want you guys to realize that when things get ugly and there becomes uncertainty, it doesn't matter if everybody believes it or not. Okay? It doesn't matter if everybody believes it or not. Okay, let's go to silver. Okay, this is, I think all of it, did I just click in stock silver? Is that where we are? Let's just go to silver coins. Okay. 294 products in here. Maybe not. Maybe there's 7 or 8. Shop 310 of those. Silver Eagles. I want to just look for silver rounds. Where are those at? Silver sets. I don't care about all this collector stuff. I'm looking for the main vein. I just want rounds. Where are those at? Silver dollars, world silver coins. All these are certified. Silver pandas, I think, are one of the most available. Actually, let's just click on in stock. See what happens. There's 329 items in here. Wow, I can't believe how much silver they've got. They must have just reloaded. The U.S. Mint has been talking about shortages here too. But obviously you guys noticed that gold is way down on their other page. Okay, so let's see, yeah, 100-ounce bars, all this stuff. You can still buy this. So if you guys are looking for that stuff, then this website has it. Somebody in Canada told me about it. I'm pretty sure that they deliver to a lot of different countries. Yeah, David, if you're ASIC regulated, I mean, we can get you a global account that you can have higher leverage with. I think you can. I'm fairly certain we can, if you wanted to do that. But yeah, otherwise, this is what I think on gold. Okay, there has been just tons of speculation about a lot of different things over the course of the last few weeks. Try to keep in mind the thing that's most important is not, oh my gosh, I'm going to be the smartest economist on earth, and I'm going to figure out how all the banks are thinking, and I'm just going to be right every single time. That isn't going to happen, okay? You need to manage your risk, okay? So let's go ahead and take a look at something that's way off the beaten path. Aussie, New Zealand. Okay, this is a slow mover. People ask me for, hey, I'm new to trading. What's a good pair for me to trade? This is one of my favorites, and it has been for a long time, okay? And the reason why is because it's slow. Okay, when I say slow, that means that the daily trading range on it's not going to be big, and it's a very rangy pair. Okay, so when I say rangy, I'm talking about this. Okay, this is the Aussie New Zealand for the last several years, back to 2014. Okay, this is the bottom. Okay, so something tells me they like this range. Okay, and they really don't like to get all the way to these lower prices. They really like to turn it around sooner. Okay, so I think that this thing continues to bottle up. And if it does do something like that, yeah, and if you guys are looking at developing your own automations, there's a lot of ways to do that. Build the bots on our website. We recommend that for a reason. It's because you can kind of build your own automation with whatever you want. You can backtest it. You can do all sorts of cool stuff. And you can learn how to do that before you ever buy it. And it's not crazy expensive. So all those things, check it out on the website. You'll be glad you did. If you've ever had this, slipped in the bathroom, hit your head on the sink, and dreamed of the flux capacitor and time travel, then that thing's for you. Marty, I've got the car here. Are you ready to go? But yeah, basically, I'm just looking for more consolidation on this one, and it seems to be, making our little dip now. We make it a little break south. Yeah, I was a big Back to the Future fan. What's funny is that they thought inflation would be worse in Back to the Future than it actually has been, which is actually comforting for me. Because I think in Back to the Future 2, I think Doc pays like $200 for a cab ride to go like 4 or 5 miles or something, and that's worse than things are right now. Way worse. So they actually predicted things to be worse in the late 80s than they are right now. So believe it or not, perspective is king. But yeah, this is the consolidative move. I'm looking on this Aussie New Zealand. It could come down further, but this is just a meat trade. Okay, I don't need that line. I didn't mean to draw that, sorry. But I'm going to go ahead and place this one real quick. Let's just sell this thing. And this is on the day chart, so this is probably something that could take a week, maybe 2 weeks. Some of we've been anywhere from 3 days to a couple months here in all of these trades that I've showed today. I've showed a lot of different strategies, so I hope I didn't lose anybody today. We've had some good participation, so I think you guys might have learned some stuff that you liked here, and if nothing else, you'll get a cool target trading indicator for showing up here today. 163.99, not quite a 2 to 1, 1.6 to 1. I'm okay with that. So we'll do 100, 160. Okay, 100, 160. Okay, And this can be a bigger trade. 0.08 would be roughly, I don't know, $80 risk at a 0.08. If you wanted to risk smaller amount, you could obviously put in a 0.01 and risk $10 on a trade like this. As far as, if you wanted to go bigger, a 1.0 would be $1,000 risk on a trade like this, roughly. Okay, so just pay attention to what you put in there. It doesn't matter what I put in that box, okay? What matters is what you put in that box and where you put your stop loss and your limit, okay? So, all of that said, okay, I hope I've driven that point home today, is that you can frame the market to look like it's going whatever way that you want, anytime you want. I can convince you guys all to buy this later if I want to. Okay, the truth is that both of those trades might be right. Okay, one of them could be right, one of them could be wrong, both of them could be wrong. Okay, so that's the part that people have trouble understanding, and that's why people, drive themselves crazy trying to figure out how to become a profitable trader. You want to know the difference between people that are profitable and the people that are not? I'm going to tell you right now. People that are profitable accept their losses before they open trades. People that are not aren't as good at that. And I can tell you that is the number one biggest difference between the thousands of people that I've worked with one-on-one, in groups, in person, in webinars, you name it. Okay, I've worked with thousands upon thousands of really, bad traders, some really average traders, and, more amazing traders that I'm probably, it would probably be fair for me to even tell you guys about. Yeah, you just want to be objective and consistent and not be worried about the money attached to your decisions. Because if you are worried, you will make worried decisions. And how does that usually work out for you guys? Yeah, if you guys get real worried and you make a rash decision, how does that usually go for you? This is a stupid question. Not great. Okay, so you don't want to make emotional decisions with your trading. You want to make calculated, consistent. Yeah, emotions are going to undermine your choices, okay? So, all the fights that you've ever gotten in with your wife or your husband, a lot of that was emotional because you didn't get enough sleep and you had a crappy day at work. And then, those dishes in the sink really just set you off. Whatever it is, okay? Those decisions are not usually the best decisions. You want to be calculated, you want to be process-driven, and you want to go through your checklist, okay? So, I think we've covered pretty much everything I wanted to cover here today, folks. We are pretty much at the end of the line. There are a lot of there are a lot of videos that you guys need to check out if you haven't already on our YouTube channel. Those are also on our web page. Okay, hopefully I can have this news tool up here sometime soon. Not really quite sure. I think Tony said that he might be able to hook me up and help me get this thing prettied up and launched here. So maybe Tony, you should hit me up, man. Let's talk. Because I've got a, David, I don't know if you web developers that are in here. I mean, I'm going to have it within a couple of weeks, but I'm a little kid with this type of stuff. It's Christmas Eve every day for me, and I want to open my presents now. So I appreciate everybody coming out.